Hey everybody, welcome to the morning market briefing, Friday, August 5th, 2022. Hope you are doing well. We do have non-farm payroll data. It is out. Tom predicts the market's going to crater. We're going to come back to both of those observations in a moment. We're going to start with China. They're ramping up their response after Pelosi's visit to Taiwan. They fired missiles over Taiwan. They sent military ships over Taiwan Strait's median line, first incursion of that line in quite some time. My favorite, they announced unspecified sanctions against Pelosi and her immediate family due to egregious provocation. So I don't know what that means. Like Paul Pelosi is going to get arrested now.
Yeah, no known criminal, Paul Pelosi.
And they're canceling dialogue with military leaders in the U.S. and halting discussions on the climate, which that's brutal. I hate that we're not going to keep talking to China about the climate. Ben, they said they were going to ramp things up if she came. She came. They ramp things up. In a way, this kind of feels like a non-story. So many of these things are relatively undefined, but it still kind of underscores the point of like, why did she go over there?
Yeah, I think that they don't really want to do anything, but they have to do something at this point in time. So they're just going to pretend like they're doing something, but they're not. But I don't really expect a military escalation significantly at this point. Having said that, I do think that China is intent on reunifying the country, but I don't think they would like a full-on military deal.
Yeah. It's just, I don't know, man. It's very Cold War-esque, where I have a hard time knowing what's actually meaningful in some regards. Tom, you got any thoughts on the China thing?
No, I'm looking at this job situation.
Cool. We'll cut Tom out of it for a little bit.
Yeah, sorry.
Inflation Reduction Act. Kristen Sinema preserves the carried interest component of the tax portion of this. That has a big impact specifically on private equity managers. That's a large portion of their compensation. But also kind of in exchange for that, there is now going to be a 1% excise stock tax on stock buybacks. That seems relatively meaningless, in my opinion. It, I guess, technically impacts corporations, though not necessarily to an extreme extent. Meanwhile, some of the richest people in the world, those private equity managers, continue to kind of have a loophole.
The private equity stuff is crazy. I mean, they've been talking about getting rid of the carried interest forever. And the thing is, with the private equity people, they have a lot of money. And so they are happy to take people to very nice dinners, buy them very nice things, take them on very nice jets. And all of a sudden, boom, you don't have a carried interest. You still keep the carried interest.
Yeah, big win for the lobbyists.
So, yeah, good win for the lobbyists. There is a new 1% excise tax on stock buybacks, which that just seems so dumb, in my opinion. First of all, how are you going to regulate someone who's already paid tax on money from buying something? I mean, that's like every single time that you go and buy a stock, you have to pay tax on it. That doesn't make any sense. These corporations are already paid their tax and they're buying their stock. I mean, I don't understand why we're going to penalize that. And the thing is, it's starting at 1%. First of all, it's not going to raise really any money. Last year, there was a record of $880 billion of stock buybacks. So that would raise about $9 billion. It's nothing. Now they look at everything over the course of 10 years. So they say, well, $100 billion. But again, that's on record stock buybacks because companies had record cash last year. More typically, it's more like $500, $600 billion in stock buybacks in a given year. And then you're looking at $5 to $6 billion of revenue. Why put it in?
We just put 10x of that in Ukraine like 3 weeks ago.
Yeah. So, I mean, it doesn't make a whole lot of sense. The deal is going to require all Democrats to sign off on it. And they do have that 15% minimum tax on corporations, although they did add exemptions for depreciation tax deductions now. So that plays a role in the manufacturers kind of like that. But even so, I don't know. This whole Inflation Reduction Act is just kind of turning into a little bit of a circus.
Yeah, I wonder too, like on all this stuff, I'm not even singling out the Inflation Reduction Act, but they do these things that are big talking points. Corporations are getting money cheap and all they're doing it with it is buying back their own stock. That's a political talking point that people that probably don't even understand the economic ramifications of that understand that talking point because they've heard it so many times. I wonder if a little bit of this is like, okay, well, maybe this will raise, $8, $9, $10 billion of tax revenue. Like, do they think people see that number and they're like, oh, hell yeah, making big corporate America pay for this? Like, yeah, like, do they think that moves the needle for someone that just reads a headline?
I think so. But I think the more important thing is anytime you establish a new tax, all you got to do is get your foot in the door.
Yeah.
And that's a starting point.
Mhm.
And if you think it's going to stay at 1%, I think you're mistaken.
This is why so many people have been against having a value-added tax or just a sales tax that automatically gets put into products, because it's
Once
so
you
easy
start.
to just keep raising it. I would say that maybe the win here in terms of tax revenue is that corporations will be less inclined to buy back stock and therefore increase dividends. And of course, on dividends, you are getting full double taxation of that. Not only do you get taxed on the corporate level, but you get certainly a lot higher than a 1% tax on stock buyback. So that would be a win for the IRS in terms of raising money if you can push more corporations to using dividends over stock buybacks.
Yeah.
But
Maybe
that
they
would be the
start
only
buying
thing.
munis.
Tax the munis now.
Yeah. Yeah. They've been trying
They've
to do
tried.
that. They've been trying to do that.
Yeah.
Yeah.
All right, let's jump to the big economic data at hand. 8:30, we got non-farm payrolls. Running through kind of the expectations. People were looking for the headline number to be 250,000 jobs added. For what it's worth, last time it came in at 372. The unemployment rate was expected to be at 3.6, which would be holding flat. Participation rate at 62.2, holding flat. Average hourly earnings expected to be up 4.9%. Slight slowdown from 5.1% improvement. Excuse me. Tom, where are we at?
Yeah. So this is a big number, much bigger than I thought we were going to get. And honestly, futures are holding up a lot stronger than I thought, because this was a very surprising number. So we came in at more than double the expectation with 528,000 jobs added. And additionally, they revised last month's number from 372 to 398. And so those are really big numbers. The unemployment rate now is 3.5%. Average hourly earnings came in hot at 5.2%. And the participation rate, which I think is probably the most interesting piece, actually ticked down again to 62.1%. So we did have people leave the labor force. I mean, this is
where are these jobs coming from, man?
I don't know where they're coming from. I mean, we had 100,000 people get laid off by Amazon. I mean, all you hear now, I mean, UPS, Home Depot, there were a number of companies today or yesterday that we were going to look at today that were talking about planned reductions. Facebook, Google, look around, there are people getting laid off all over the place. The question is, I guess, are these people quickly getting picked up? Is that the move? Are they, they're filling some of these opening jobs, and because there's such a gap there, they can quickly get rehired?
And is there like maybe a wave of newly motivated job seekers who have kind of cruised along for a while, run out of stimulus savings, realize the economy's not great? Hey, I better go to work.
But that's the thing, is the labor participation
rate
dropped. Yeah. So it's an interesting read. The bond market is getting absolutely popped right now, which is to be expected. I mean, we've been saying it all week long that we're way overbought on bonds. The 10 years off 10 basis points, the 30 years off, it's back over 3%. The front end of the curve is getting pummeled. I mean, all of that reads through to the Fed is going to have to continue to be aggressive. The pivot and pause, I think, are off the table. Odds now for a triple rate hike in September are up to 44%, which is up from this morning. I mean, this is way outside of what I thought was going to happen, especially if you think that if the Fed had said anything about potentially pivoting or people thinking that they should pivot. What we would have needed is a reduction in non-farm payrolls, like actual lost jobs.
Yeah.
Not only that, we doubled up and revised up last month. So more rate hikes are coming. And I think they're coming sooner rather than later.
We're getting a little reaction on the equity side. The Dow futures are up about 15 basis points when we started the call, down 26 now. Not a huge swing. I mean, kind of your point, Tom. A little more resilient than I would have expected. I'm interested to see what happens over the next, between now and the opening bell.
Yeah, I mean,
trade off more.
If you had asked me if we come in double, I would have said the NASDAQ be down 2% plus before the market opened. But futures are remarkably resilient at the moment.
I think when the Fed is already going to hike, though, I think bad news is bad news, good news is good news. When there's a potential shift in the offing from the Fed. I think that you can have that good news is bad news and bad news is good news. But right now, I think good news is broadly good news for now. But I would say I was surprised by the average hourly earnings.
It's at what, 32?
So this is a live update on futures for treasuries. We're now looking at 2.7% or 2.7 hikes. So it just moved up 30%.
I mean, I think assuming that we get anything close to 9% next week on Wednesday when the CPI comes out, I think that we're locking in three hikes,
I think we will.
a 75 basis point. And really, if you're the Federal Reserve, the risk reward is very favorable to your mind, because if you're using jobs as a proxy for the economy, then what's the downside of hiking?
Yeah.
In fact, you probably want to hike faster because there are too many jobs.
You've got a lot of cushion.
Yeah.
The wild thing is they're basically saying between 4 and 5 more hikes for the rest of the year. Like, I wouldn't be shocked if we got 9 hikes before the end of the year.
That's what's weird to me is even just going back a couple months. If you said, hey, go back, was it June that we did the first triple hike?
Yes.
If you go back to May and you said, hey, we're going to have triple hike in June, triple hike in July, likely a triple hike in August, simultaneously, inflation is just not going to come down. My expectation on the unemployment rate would be significantly higher than where we are now.
Yeah.
I mean, it's just something I'm flat out wrong about. But
What was interesting was the household survey actually only increased by 177,000. So at the same time, are there people who are working multiple jobs, especially like maybe someone in retail working a couple of retail jobs, college students at home for break, doing a couple of jobs. And I think that does play a role, but overall the numbers are the numbers and overtly strong in July.
Yeah,
This is shocking.
yeah, I'm very, very, very surprised.
I audibly gasped when the number came out.
Yeah, it's like, are we live? CPI next week, obviously the big data point. We still have earnings trickling in. Does anybody expect any kind of meaningful surprise on CPI?
I mean, it's right now the expectation is 8.7, which is what the readout was when we got GDP. I would expect it to come in around that level.
I mean, 8.9.
I mean, yeah, somewhere between 9.1 and 8.7. That's kind of the range I'm thinking.
I think you might have had a little bit of a drop off on the gas and the food and energy side, but I mean, at least maybe on the energy side, I don't know. I think that you're seeing more and more broad-based increases, and I think those are going to accelerate over the back half of the year. I mean, I think that the CPI, especially the core index, is going to really ramp in the second half.
Yeah.
Which is going to put more pressure on the Fed and going to put, we have that magnetic pull of trying to slow the economy.
Yeah.
The Fed's trying to slow the economy. That's the end goal. And if the Fed is successful, the economy will slow. And jobs reports like these are really good. The problem is you have that in the, that demon continue to prop up. And that's just going to continue to be the case until we actually get that slower.
Yeah.
So the question is, do you guys think that we're in a recession, or do you think that this strong jobs market actually is an indicator we might not be?
I still think we're in a recession. I don't really care what the employment rate is.
I'm sort of in that mode, but this is a real shock to me.
Yeah. Yeah. If people can't pay their bills, and like AT&T said, they're not paying their cell phone bills, the economy is deteriorating. The question, I mean, yes, there are jobs. Yes, people are making more money in nominal dollars, but they're having to pull back. And we're seeing that from a lot of companies. People are pulling back, they're trading down.
I just think, like, for me, it's like a symptom of a recession is the employment picture. That's a symptom. Like, I don't have COVID because I'm coughing.
So we have an asymptomatic recession right now.
we might be. We need to get boosted, though. We got to get boosted. All right, we'll wrap it up there. We'll be back Monday morning, 8:30. Yeah, Monday morning. Hope you guys have a great weekend. Talk to you guys soon.